Hello, my name is Kurt Worley. I am the quantitative analyst at fxbootcamp.com. Today is Friday, February 18th, 2011. This is your New York session video technical briefing. It's a video review of some of the price action we covered in the live class today at fxbootcamp.com during the New York session. And let me remind you that the purpose of FX Bootcamp is education. This is not an alert service. The currency coaches do not make trade recommendations, but we do provide real-time technical and fundamental analysis to help you put together your trade plans throughout the day. And we remind everyone that past trading performance does not predict future results. Do not trade money you cannot afford to lose. What you now see is a 15-minute chart without indicators for the Euro-USD currency pair, as that chart looked at 7 a.m. New York time on GFT's Dealbook 360 trading platform using FX Bootcamp's custom layout. Now I've got this chart zoomed out to show price action since the early part of the European trading day on Monday. Now the reason I've got this chart zoomed out like this is to highlight how this pair has respected a roughly 10 pip zone between 1.3540 and 1.3550 all this week. Looking on the left hand side of this chart, I see that the euro establishes highs on Monday and Tuesday in or near that 10 pip zone. Looking in the middle part of this chart, I can see that on Wednesday the euro tinkered with that zone, that 10 pip zone again, virtually all day on Wednesday. And then moving to the right, I can see that yesterday's lows were generally defined again by that same 10 pip zone. Okay, given that recent history of euro respect for that 10 pip zone, it was certainly reasonable to assume that some euro bulls might be looking to buy on this pair's next encounter with that area. Now, as it turns out, that next encounter occurred between 5 and 7 a.m. New York time today. That was during my coaching session, and we certainly spent some time in my live coaching session discussing the recent relevance of that 1.3540 to 1.3550 zone. Now, before I zoom in further on this chart, I want to draw your attention to the highs over the prior 3 trading days. I've just identified those highs with blue arrows, and I've connected those previously with an orange trend line. Now you'll see that orange trend line come into play later. Okay, let's zoom in for a closer look at recent price action on this chart. Again, the horizontal black line at 1.3550 near the bottom of this chart, that line represents the top of that 10 pip zone, which seems to have been important all week to this pair. Looking on the lower right hand portion of this chart, I see the latest swing low at about 1.3545 right there. A more recent swing high at 1.3566 right there. Now if you're looking for a long at about this point in time, down in here, as the euro is sitting near 1.3550 again right there, you're betting that this is a 1, 2, 3 pattern in the making. That, by the way, is a very common trend reversal pattern, so no need for me to go into great detail on that. Now the euro spent some 8 minutes lingering near 1.3550, giving bulls plenty of time to enter a long trade there. Again, entering right around here, 1.3550. Oh, I also mentioned in the live class that skilled traders who were looking to short the euro later might play this as a short-term scalp long up to whatever level they were targeting for their short trade. Now, whatever your ultimate bias, bull or bear, if you took the shot, you're long at or near 1.3550, as I've already highlighted. Your stop loss could be initially positioned just below 1.35 for catastrophic protection purposes, and options for exit strategy could be to close the trade if the euro makes a lower low for today, again below that recent swing low, or maybe you get out on a break below 1.3540, again the bottom of that recent 10 pip range. Very little to lose there if your exit strategy is to get on a new low for today. Nothing very complex about that 1, 2, 3 setup. At 7:45 a.m. New York time, you're sitting on about a dozen pips of profit on that long. Arguably not quite enough to justify moving your stop loss to break even, but given the fact that the euro briefly rose just above that number 2 point we mentioned earlier, here's the number 2 point. Since the euro briefly rose above that, you might be at break even now anyway. Over the next 15 minutes, the whole mood of the market changed. Look at that latest green candle. That is by far the biggest 15-minute candle of any color thus far today. That was the Euro's response to comments by Italian economist and European Central Bank Executive Board member Lorenzo Bini-Smaghi, who basically said that the ECB can take preemptive action on interest rates if needed. Minutes after Smaghi's comments hit the news wires, we were hearing reports that Eurozone government bond traders suspected that the ECB was buying bonds, which isn't too surprising given the recent rise of the yield on the 10-year Portuguese government bond above 7%, a key level for that bond. Now, both of those news items, a hawkish tone from a key ECB member and falling bond yields in so-called peripheral countries like Portugal, both of those are euro bullish, not necessarily in the long term, but at least bullish enough to squeeze some euro shorts today. So in just 30 minutes, the euro has erased virtually all of its losses over the past 12 hours. If your bias toward the euro is still bearish, this just might not be your day. If you're a bull but didn't take the long earlier, you might be waiting to buy on a dip. Okay, I'll spare you the details about the next hour, but we'll say that the euro drifted up to establish a new high for the week, again rising above yesterday's high. The euro then stalled in a sideways range after that. Now, when you get a sharp move up like this, it's good to check the longer term charts to get some perspective. Let's take a look at a 2-hour chart for this pair. Here's the 2-hour chart as it looked at 9 a.m. New York time. By the way, there's nothing magical about this 2-hour chart. As I wrapped up my live coaching session, I recall mentioning to the live class how big the recent green candles on the euro were. I think I was referring to an hourly chart at the time. I only selected this 2-hour time frame because a 100 pip 2-hour candle, which we just got, I'm identifying that 100 pip candle in blue on the right hand side of the chart. That is rather rare on the euro. It appears the last time we saw a big green 2-hour candle of that magnitude or bigger with small wicks on either end, last time that happened was January 13th, and on that day the euro extended higher by another 100 pips. Now don't treat that as a rule of thumb. Here's my point. Big green candles like the one we just got, big green candles whether driven by new buyers or by short covering or both, such candles are often followed by more green candles, especially when driven by some kind of news. If you're looking to buy this pair, you would prefer to do so at a logical level or area of support. The more prospective sources of support at or near your long trade entry level, the better. On a euro daily chart during the live class, I drew a black trend line connecting the highs from February 3rd and February 9th, and also today's early Asian session high. I've identified those highs with blue circles on this chart, and I'm showing the black trend line connects those highs. Look again on the right hand side of this chart. The euro's recent rise broke above that black trend line. That raises the possibility of a trend line retest later. Okay, if you watched my video review of the February 8th New York session, you might recall my mention of the 1.3620 area due to price action shown on the left-hand side of this chart. I've just identified that price action with the blue marker on the left-hand side of the chart. Now, on that day, February 8th, which is right here, on that day, the euro bounced at 1.3615, about 10 minutes after the U.S. equity market opened, then rose 70 pips north from there. On February 9th, the next day, and February 10th, the day after that, on February 9th and 10th, the euro responded on multiple occasions to a roughly 10 pip zone between 1.3610 and 1.3620. Looking back on the right-hand side of the chart, the euro responded yet again yesterday afternoon near the end of the European trading day to that same area. You can see the response to the 1.3615 area right there. Guess what? Guess what? The recent euro rally broke above that 1.3610-20 area. That suggests the possibility of role reversal. In this scenario, what was resistance yesterday and resistance in the past could now become support. Okay, with all of that in mind, let's move forward in time by 30 minutes and take a closer look at price action on a 15-minute chart. This is how a 15-minute chart without indicators looked at the U.S. equity market open, 9:30 a.m. New York time. Now, some of you already know it's coming. I'll say it anyway. Volatility on the major currency pairs often increases after the U.S. equity market open. Now, it certainly doesn't happen every day. Let's just say that it happens enough to be noticeable. On the upper right-hand portion of this chart, note the convergence of that previously broken black trend line, again, that trend line going back to February 3rd, with that 1.3610 to 1.3620 zone represented by the horizontal blue line at 1.3615. I'm talking about this convergence right in there, those two lines. Hey, do you want to throw in a Fibonacci study into the mix? Let's fib the move up from down here to up there. The 38.2% fib retracement level of that move up is represented by the horizontal bright red line that I'm pointing to now at 1.3608. Now, if you weren't long from near 1.3550 earlier, but now looking for another chance, and if you didn't take the shot on the trend line retest near 1.3615 right in there, then you could have justified entering a long trade at about 1.3612 during the early part of the next 15-minute candle. 1.3612, about right in there. Now, does that sound too specific? Consider this. During the first minute after the U.S. equity market opened, again 9:30 New York time, the euro reached a point just 2 pips above that 38.2% fib level. Close enough, I'd say. The euro spent the next minute, again the second minute after the U.S. equity market opened, the euro spent that minute between roughly 1.3611 and 1.3614, while 1 minute stochastics were oversold. An entry at 1.3612 is 30 pips below the orange trend line we discussed earlier, 40 pips below the daily M4 pivot point, and if the euro can break above those levels, it could run higher. You want a worst case exit strategy for that long? Close it if the euro dips below 1.36. Look in the middle of this chart. Note the selling pressure on the 1.36 that I just highlighted in blue during the early London session trading. That suggests 1.36 could become support. At 10 a.m. New York time, you're sitting on a profit of about 15 pips on that long. At that point, you can minimize your risk by closing the trade on a break below the swing low that we mentioned earlier. That swing low very close again to the 38.2% fib. The long did take some time, but finally got going during the final hour of the European trading week. After breaking above that orange trend line we discussed earlier, the euro reached its daily R2 pivot point about 15 minutes before London close. London close represented by the vertical red line on the right-hand side of this chart. If you close a long trade at R2, you earned either 50 pips or 110 pips, depending on which of the two entries that we've just discussed you took. By the way, if you were willing to stay with it, the euro never really saw a dip down in price greater than, say, at about 15 pips over the next couple of hours. Let's check a 3-minute chart for a look at the entire move over pretty much all of the New York trading day. Here's a 3-minute chart showing most of the New York trading day. You know, I'm tempted to verbally describe what you see here, but I've already talked long enough. I think I'll just let this notated chart speak for itself. Feel free to pause this video now if you want to spend some extra time looking this chart over. Again, my name is Kurt Worley, and this has been your New York session video briefing from fxbootcamp.com for Friday, February 18th.